Hello, everyone, and welcome to Financial Accounting. Today, we're going to talk about how to use accrual concepts of accounting to analyze, record, and summarize transactions. Now let's look at a couple of examples. Our first example is receiving rent in advance. Let's look at how this transaction is recorded. Family healthcare may provide services to patients covered by health insurance. In that case, payment will not be received until a point in time after the service was provided. Revenue is earned when the service is provided to the patient. Likewise, the company may incur expenses, such as medical supplies purchases, where payment will be made at a point in the future. Expenses are incurred to generate revenue and will be recognized according to the matching principle. On November 1st, Family Healthcare receives a rent payment of $1,800 in cash from ILS for the use of its land. ILS will be using the land for a temporary parking lot for 5 months. Since cash is received in the amount of $1,800, cash is increased by that amount. This increases cash flow from operating activities under the statement of cash flows column. Since the corporation entered into an agreement and accepted $1,800, they have an obligation to make the land available. Because the liability relates to rent that hasn't yet been earned, it is recorded as unearned revenue. No revenue is reported on the income statement. As time passes, Family Healthcare will earn the rental revenue. On November 1st, the business had paid a $2,400 premium for a 2-year business insurance policy. By paying the premium in advance, Family Health has purchased an asset called Prepaid insurance. The mix of assets has changed. Cash decreases by $2,400 and prepaid insurance increases by $2,400. The payment of cash also decreases cash flows from operating activities under the statement of cash flows column. Prepaid insurance expires with the passage of time. That expense is matched or recorded as time passes. On November 1st, they also paid a $6,000 premium for a 6 months malpractice policy. As the premium was paid in advance, once again, cash decreases and prepaid insurance increases by $6,000. The payment of cash also decreases cash flows from operating activities under the statement of cash flows column. Additional capital investment is recorded in the same manner as Dr. Landry's initial investment. Cash under the balance sheet column increases by $5,000 to reflect Dr. Landry's cash investment. To balance the accounting equation, capital stock under stockholders' equity is also increased by $5,000. Under the statement of cash flows column, cash from financing activities increases by $5,000. No income statement accounts are affected. Family Healthcare purchased $240 of supplies on account. The effect of purchasing supplies is similar to the insurance transactions, as supplies are considered assets until they are used in generating revenue. The promise to pay for supplies in the future creates a liability called accounts payable. Since no cash is paid or received, there is no impact on the statement of cash flows. The company also purchased office equipment by making a $1,700 cash down payment and having 5 additional monthly installments of $1,360. In this transaction, the assets office equipment increases by $8,500 and cash decreases by $1,700. Cash flows from investing activities are also increased by $1,700 under the statement of cash flows column. The remaining 5 payments represent an obligation. This obligation is recorded on the balance sheet as a note payable. $6,800 is a sum of 5 installment payments. The accounting equation for this transaction is minus $1,700 plus $8,500 equal to $6,800. Family Healthcare performs services to patients on account in the amount of $6,100. This means cash will be collected from the patient's insurance companies in the future. Services provided represent fees earned, which is a revenue account that increases retained earnings and is also recorded in the income statement column. The company performed services to patients who paid with cash in the amount of $5,500. Providing services for cash will increase the cash balance on the balance sheet by $5,500. This is also shown on the statement of cash flows as an increase in cash from operating activities. The revenue earned will also increase the retained earnings balance by $5,500. Under the income statement column, fees earned increases by $5,500. The company received $4,200 in cash payments from patients' insurance companies for prior services performed. Cash is increased by $4,200, while accounts receivable is decreased by the same amount. Both accounts are asset accounts. The total assets amount didn't change. The cash received is also shown as an increase in operating activities in the statement of cash flows column. The company paid $100 for supplies previously purchased on account. The payment of expenses incurred in the past decreases cash and accounts payable by $100 under the balance sheet column. Since supplies are used in the normal operations of family healthcare, cash flows from operating activities is also decreased in the statement of cash flows column. The company incurred expenses for the month of November and paid cash for a total of $4,690. Payment of expenses in cash will decrease the cash balance on the balance sheet by $4,690, which is the total of the expenses. This will also be shown as the decrease in cash from operating activities under the statement of cash flows column. Retained earnings will decrease by $4,690 for the expenses. Expenses have the opposite effect from revenues on net income and stockholders' equity. Under the income statement column, each expense is listed as a negative amount. The company paid $1,200 dividend in cash. Since the dividend is paid in cash, the cash balance on the balance sheet decreases by $1,200. Under the statement of cash flows column, the cash paid is shown as a decrease in cash from financing activities. To balance the accounting equation, retained earnings is decreased by the $1,200 dividend paid. Note that dividends represent a payout to the owners and are not considered an expense. Thank you for watching this video. Don't forget to like and subscribe. More videos are coming soon.